This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swamy. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as Mygate, Neo, and Reco. To know more about Prime, visit primevp.in. Today we have with us Ganesh Rangaswamy. Ganesh is the co-founder and managing partner at Quona Capital, which is a growth stage venture capital firm focused on fintech in Asia, Africa, and Latin America. Welcome, Ganesh, to 100x Entrepreneur Podcast.
Thank you. Thanks, Siddharth. Thanks so much for having me.
Ganesh, we would love to know about your journey from your Infosys days to here working at Quona.
Sure, Siddharth. If I look back at my career, it's been a combination of technology, entrepreneurship, venture capital, and working on financial services solutions all through my career. In a lot of my Infosys experience was back in the West Coast, Silicon Valley, and broader US, working with retail, commercial, consumer internet and financial services clients. And one of the largest programs I managed was actually re-architecting the authorization, clearing, and settlement systems at Visa International. That's really what got me into financial services and the blend of financial services and technology, primarily. And from there, I went to Harvard Business School, where I started a company called Travelguru, which eventually, along with my partner, which eventually became the largest hotel consolidator in India and Southeast Asia when Travelocity acquired it. And since then, I've been an investor both in the Valley and then back in Asia and India for over 10 years now. And a lot of my personal passion and focus comes from two things. Now, one is trying to figure out how to combine my experiences in technology, in entrepreneurship, and in financial services to back impactful entrepreneurs and to be able to work with them, hopefully to create success. And the second aspect really is from the perspective of having experienced venture capital and entrepreneurship as an entrepreneur, as a startup founder early in my life. And my personal perspective coming out of that was there is a significant gap between a startup founder's perception and an investor's perception. And largely, without having been in founder's shoes, it's very hard to actually empathize with founders or the challenges that people go through. So my entire investing and venture capital journey has been really about being an entrepreneur's entrepreneur, or entrepreneur's investor rather. And how do you really support entrepreneurs by having empathy and that fine balance of when do you challenge entrepreneurs versus when do you be supportive to them through tough situations. So that's really what drew me into venture capital. And we started Kona about 6 years ago. Before Kona, I invested in I'm going sort of in reverse now, but basically I invested in a whole bunch of other financial inclusion and microfinance organizations when I moved back to Asia and India from Valley. And number of them today are fortunately even public. Number of them are small finance banks. And frankly, that's what got me excited to say if we can blend market oriented approach to financial inclusion, and combined technology, given the digital evolution that we are all seeing, it will hopefully help us produce more impactful results over time. And before I moved to Asia, I started my venture capital career with Greylock Partners back in the Valley, helping start Asia and India operations more specifically for them.
And can you tell more about Quona Capital, the countries which Quona is operating in? What's your check size and what state do you come in?
So Kona is a fund that three of us came together to start. The ethos of the founders is very much aligned, which is what I was alluding to in terms of how we believe the whole digital landscape and the future of financial inclusion in the or inclusive finance in the context of digital landscape would rapidly change given the newer distribution mechanisms, SaaS solutions, cloud, easier, just a lot more efficient ways to obviously develop solutions, and this very well with your day job. And the idea was large part of the target segments for whom we wanted to back entrepreneurs creating solutions in emerging markets are essentially underserved or unbanked. And we operate, to your question, we operate in India, in Southeast Asia, in Latin America, in Sub-Saharan Africa, South Africa, and we are now starting to get more active in in MENA region and in GCC. And the couple of constant themes you'll see across these markets is one which I've already mentioned, where large part of the target segments, on when it comes to basic access solutions or basic quality of solutions, are underserved or unserved. And the other dimension of Kona's thesis is that the entrepreneurs we back essentially are creating a financial innovation or a financial solution for certain end purpose. I mean, it could be it's basically to figure out how you make the life of consumers or SMEs better. It could be about better education, better healthcare. How do you progress or build up your business or scale up your business, or so on and so forth. It's essentially towards an end outcome, and from that perspective, as much as Kona invests in digital, consumer lending, SME lending, payments, insurance, wealth tech, etc. We also invest in number of adjacencies. Whether it's the segue of agriculture and finance, health and finance, education and finance, commerce and finance, mobility and finance, so on and so forth. And we typically come in at the pre-A to A plus stage. So you can say it's largely A, and to certain extent B. But we are getting more flexible as we evolve as a fund, and just recently we closed our new fund, and we have been getting more flexible from pre series A up to B, but leaning more towards A investment. And ticket size is quite flexible. It could be anywhere from $1 million to $10 million to start with, but usually in the sweet spot of 3 to 5 million.
Ganesh, during your first year of your MBA at Harvard, you started an e-commerce company called Travelguru. What were you thinking at that time? Was it like the idea was so thrilling you couldn't wait to execute, or the MBA didn't seem fascinating to you?
It's a good question. Frankly, Siddharth, when I started at Harvard Business School, the focus was very much on specialized business degree in entrepreneurship and venture capital. I mean, through my stint at the in the Valley, I'd come across a lot of investors and successful entrepreneurs with an HBS pedigree, and that really inspired me to go to HBS. So the idea walking into HBS was really not to start a company while there, but I think couple of months into HBS, I met Ashwin Damera, who eventually became my partner at Travel Guru. And Ashwin had been sort of working on this. He was a year ahead of me in the school, and over the previous summer, he had been working on this business plan. It was sort of starting to shape up, but still early days. But frankly, I was obviously planning to try my luck with entrepreneurship after I graduate. But at that point in time, I think Ashwin's pitch was compelling enough. The idea was exciting. Digital commerce was just getting started in India. Frankly, there were a lot of gaps still. I mean, travel was a massive space with lots of inefficiencies. So I think the combination of all of this put together, and the fact that you could really digitize a massive but fairly complex space, is what got me excited about it. But I think, frankly, it was when we made the decision, it was probably early in the morning. We had gone through a 6 7 hour late night discussion, and I guess it was the early morning high which also led us to make that decision.
So you did complete your MBA while work starting Travel Guru.
Yes, it was a very delicate dance and balance, but I did, after this summer of setting Travel Guru up, along with Ashwin in Mumbai, I did go back to complete my MBA.
And Ganesh, can you tell us about your experience and the size of the exit of Travel Guru, and what made you then convert into a full time VC after Travel Guru? Was that you financially retired from life? Just kidding.
Yeah, so I think, everyone has their calling and purpose, and I guess it's not necessarily tied to financial success, or a life of semi retirement because of financial success. But in case of Travel Guru, I think, no, we exited the company in 2008 9. By that time, I had become a non-exec director, because part of our initial strategy was I could help expand in international, while Ashwin really focused on building up the company in India and Asia. Frankly, very soon after we raised funding, the market became quite tough, and we decided to focus a lot more on hotel consolidation instead of airlines. We focus a lot more on digitization of entire value chain, including payments, and a lot of our focus became India and adjacent markets in the region. And hence, I slowly transitioned into a non-exec role before our exit. And also in 2008 when we exited, this was clear, towards end of 2008, this was probably amongst the toughest of times, and we had a couple of the largest travel players in the world back then, as suitors who were keen on Travel Guru. And as you can appreciate, for confidentiality reasons, I probably can't go into a lot of the details of it, but eventually Travelocity, which at that point was probably the largest travel company in the world, along with Expedia, acquired Travelguru. And as I mentioned earlier, my drive to become become a VC or a startup investor was really from the perspective of being able to connect with entrepreneurs, and work with entrepreneurs by appreciating the challenges of running a startup, and really have an inside out view, as opposed to an outside in view into it as an investor. And when we raised capital or funding at Travel Guru, I think a lot of investors in those days were frankly ex consultants or bankers, and really smart folks, right, who helped catalyze the startup ecosystem. But there was a significant mismatch between the way they would approach a startup versus the way a founder or a classic entrepreneur would approach a startup. And we ourselves faced some of those challenges. We had a fairly full base of investors around the company, and we also went through some of those challenges, which frankly, really is what motivated me and appreciated me, to realize the gap between an entrepreneur's perspective and an investor's. And that was the primary reason, I became an investor. Aside from the fact that I thought, an investor's life would be an easier life. I mean, I'm just kidding, but sadly, I realized that is far from the truth, if anything.
You said in one of your interviews that Kona invests in teams which understands, respects, and fears lending. What do you mean by that?
Yes, so I in fact was on a webinar or master class yesterday where I was elaborating on this point, and we really stand by that. And what I mean by somebody who respects and fears lending is that in the hustle of fintech, I think sometimes the sequencing is misplaced, and people let the tech override the financial services. And there are a lot of leverage that the digital aspects can obviously bring, whether it's to especially if we take lending, whether it's to the front end or the middleware of KYC and authentication and underwriting, or the back end of collections. But fundamentally, lending is a set of things which all rely on the lender's ability to really really understand their customer segment, their life cycle, the way the customer thinks, the way the customer generates free cash flow, the way the customer operates with the loan, and their ability to really meaningfully utilize that loan in order to be able to repay successfully. And there are lots of different products, there are a lot of different dimensions to underwriting, but fundamentally it comes down to deeply understanding the customer. Secondly, from a certain vantage point, when I say deeply understanding the customer, it's a very generic statement, but it's from the vantage point of the product you're offering and the purpose you're offering it for, and the customer's ability to really fulfill that purpose and then be able to repay. Secondly, there are some players in the market, who know and who have been on the receiving end of originating, even let's say a single bad cohort. Those who have really been at the receiving end of it, like those who have been at, let's say, Wonga, or those who have been at On Deck, which is kind of going through its own challenges now, they know that even couple of cohorts of tough origination can take maybe up to even couple of years to recover from, because the nature of the revenues and the margins therein are not enough to cover up for one or two cohorts of bad origination. And the challenging part is, a lot of the younger entrepreneurs, or a lot of the folks who are new to lending, irrespective of their age, who have limited perspective on lending, do not appreciate this enough, because couple of bad cohorts of lending can wipe out a company, period. People just don't recognize that. And either you have to realize that and figure out how to protect that with your life, or you have to, if you're not a founder who understands it, your first order of business has to be getting someone on board who really really understands it and who would be a peer. And in the hustle of fintech, and sort of treating fintech like the next next e-commerce, or the or the next Atlantis, I think number of entrepreneurs and investors are forgetting that basic principle. And I guess, post COVID, we will we will see a lot of fintechs which are going to find it very challenging to stay alive. Some of it might be because of COVID, but some of it, but a fair bit of it would also be because they were on weak footing and on fragile principles to even start with.
One of your companies, IndiaMart, went IPO, Ganesh.
Hmm.
When you invested, it is reported that Kona had a 4% uh, equity in the company or share of the company. When IndiaMart in 2016 raised $22 million, that at IPO, that must have been a fantastic exit. Can you share more details if possible?
Sure, Siddharth. So IndiaMart, of course, is a public company, so there is sensitivity around how much I can share. We co-led the Series B along with Amadeus in 2016. IndiaMart, in that sense, is a beacon of digital commerce. They're patient, long-term entrepreneurs. They only raised two rounds of capital, institutional capital, over the life cycle of the company. I mean, the Series A was almost a little over 10 years ago, and the Series B was a little over 4 years ago, which is what we co-led. And at that point in time, it was basically us, Amadeus, Westbridge, and Intel as existing investors who participated. The entire thesis was, was around a couple of things. India Mart had a very very strong connect with the SME supplier and buyer universe, and they had worked hard over the years to educate that universe to really get them on board digital platforms, to help them discover more meaningful solutions, to help them with price discovery, and to provide them a set of affiliated solutions around the core discovery and transaction process to make things a lot more frictionless for the buyers and suppliers. And our value add coming into IndiaMart was really help them build out the transaction side and the fintech side, which was around smoother payment solutions, help build buyer protection and escrow solutions, and also to scale credit solutions, which in several cases are integral to the MSMEs. And that's primarily the area where those are primarily the areas where we were helping IndiaMart. And the company was close to breaking even at that point in time. I guess now, obviously, their results are quite public. They have probably reported 3+ quarters of results since they went public. And the year FY20 was a fantastic year. They grew profitability phenomenally, and the market has obviously recognized that. And the stock's gone up about 2.5 times since they went public. So it's been the most successful digital IPO in the country in at least in the last decade, if not more, in terms of how the stock has sustained and performed on the back of company's performance. So we remain, extremely bullish on IndiaMart, and are very proud to see what the journey the founders have traversed. So we continue to still be investors in IndiaMart. I think in the IPO, all investors had to exit to a certain extent to make the IPO happen, which we all did. But beyond that, we continue to be quite excited about IndiaMart and are still investors in the company.
And I believe when you invested, the valuation was somewhere around 100 million in 2016. Currently, IndiaMart has almost crossed $1 billion in valuation.
That's right. Yes.
That's a fantastic return in 4 years. Like never heard uh, in VC, a company going public since 4 years in investment.
Yeah, it's definitely be very rare, and at least in our country in the last decade or so, that kind of success while going public has is unheard of for a digital company. So definitely they have done us all proud.
And can you tell us more about Coins, which you exited to Gojek? When did you came in the company? When did you exit, and how was the journey like?
Sure. So Coins.ph is today probably the largest digital payments solution provider in Philippines, and also now in some of the adjacent parts of Southeast Asia. The company fundamentally started their journey as a digital asset company, actually crypto asset company several years ago, now about 6 years ago, 6, 7 years ago. And the whole idea was to facilitate easier remittance into Philippines, because the cost of remittance was prohibitive. At that point in time, it was about 7-8%. But by leveraging the blockchain infrastructure, they were able to bring that cost down dramatically to sub 2%. And that's how Coins picked up. And they also had an e-money license, and had a wallet of their own, so they could hold money and they could more efficiently transfer. And 10% of Philippines GDP depends on remittance. So that's kind of how Coins got traction. When we invested, they were just starting to take off. We led the Series A, and Naspers slash Payu came in soon after us in an extension to that round. But we led Series A. That was also back in 2016, if I'm not mistaken. And the company very soon developed into the largest digital wallet and payments player in the country. This is despite two of the largest wallets in the emerging markets having been in Philippines, which were both launched by the incumbent telcos, one by Globe and other by Smart. And they were largely using closed loop wallets to encourage their telco customers to utilize this wallet for various services. Now, in the midst of that, when Coins came in with a wallet, starting with remittance, but then they started rapidly expanding their use cases, which is what led to their growth. And they were interoperable, and they created an open payment system and wallet. It attracted a lot more customers to them, as opposed to having to deal with the closed loop solution that the telco wallets were providing. And over time their use cases really expanded phenomenally, whether it's utility payments through the click of a button, which today seems quite common. But these are same people who, whether for rental payments, whether for property tax payments, whether for telco payments, so on and so forth, or top ups, etc., used to stand in a, go to a store and stand in queues for 30 minutes to 2 hours, etc. And coins changed that dramatically. So, and then when Gojek actually acquired coins, they were on the path to start evolving their their services to beyond payments. I think if we look back from 2020, if someone was in the position that coins was in 2017, they would today pitch themselves as a neobank. But that's kind of what coins was moving towards. Even they're sort of ahead of their times on the neobanking concept, but they were doing it without calling themselves a neobank. And the reason Gojek, and there were basically three large suitors for coins who were quite excited about the asset. And the reason they went with Gojek is because Gojek looked at coins as their strategic entry into Philippines. And this was around the point in time where Gojek had started moving from mobility into payments in a pretty significant way. And they looked at coins and said, hey, this company already has a pretty expansive payments infrastructure, and we can roll out other use cases and services on top of it. And hence, which is something they had strong expertise in from Indonesia. And that's kind of the reason why it was quite synergistic between the two. And that's how that transpired in 2018. The other option, again, in the interest of sort of sharing the thought process, the other option for the company, where there are three investors who were quite keen, was to raise about a 50 plus million series B, because that's the kind of war chest they would have needed to kind of remain independent in the market and keep scaling up. Because in 2018 we reached a point where Alibaba, Tencent, Grab, Gojek, all of them started getting very excited about the digital payments ecosystem in Philippines. And the choice for coins was to be able to raise enough of a war chest to compete, with those big boys, or to sort of find a home where they will have hopefully reasonable access to resources and capital to be able to fight the others and still remain the dominant play. So that was really the decision, and frankly there are no easy choices there. But the way it transpired is, between the of the four, couple of those players were excited. And we thought the exit was fair, for to both the entrepreneur and to the investors who actually got a good return out of it. And we all agreed to go forward with it.
Ganesh, you invest across multiple countries. How are you able to focus, dealing with such diverse markets? Uh,
Sure, sure. So Siddharth, if you look at venture investing, I guess there are three different dimensions of sector, stage, and geography. And typically, folks are take a it's a local business, and people take a geographic view to it and focus on a certain geography, but very diverse from a sectoral point of view. And again, there are a lot of high quality investors who are doing that. And we decide to take the reverse approach, which is also, which is challenging on one side, but which is also what's given us the differentiation and kind of the investors and entrepreneurs and LPs and entrepreneurs and peer investors that we have today. Because we all come from reasonably deep financial services and financial technology experiences. We also believe that financial services or fintech innovations can be sort of, the oil that greases the economic engine, in terms of being able to help people meet the targets in their life through various financial innovations, again, whether across sectors, as I have talked about before. And third, we also, interestingly, financial services happens to be a space, and fintech especially, given that technology is an equalizer. There is a lot of transferability across markets. There are obviously a lot of nuances, whether from a regulatory perspective, policy perspective, consumer or SME orientation perspective, so on and so forth. But also there are several similarities in terms of solutions being transferable, or the ability to learn from success in one market into the other. And the last dimension is, if you look at our focus, we are very deliberately focused on global emerging markets. As which, as I mentioned, India, Southeast Asia, Africa, Latin America, and GCC. We do not really invest in the US or Europe, primarily because we believe the emerging market ecosystems are quite different from the more mature market ecosystems for a number of reasons, including infrastructural, soft infrastructural reasons, but also because we see fair bit of transferability and similarity in consumer behavior, SME behavior, the challenges and gaps in these markets. And over time, this has now held us in very good stead, because it's one of those things that you can only build up over time. The case studies and referenceability of transferability and knowledge only gets built out over time. And now 6 years into Kona, we have very interesting reference points across markets, which sometimes also opens up our minds to newer ideas in other markets. And it now has sort of a snowball effect of its own, which is actually benefiting Kona as a firm a lot more than we expected when we started.
So, which is the country you are most bullish about?
That's a tough question. I think our out of the 12 or so countries we are quite active in, I think India and Brazil are top countries by far. If we look at sort of the past of Kona, the fastest growing country at this stage is probably Indonesia. And there are several countries which are emerging fast, including Indonesia, Mexico, and South Africa. And Southeast Asia broadly as a region is actually evolving very rapidly, with Indonesia as the center of gravity, because there are some soft infrastructure or digital infrastructural solutions that have been built, and some that haven't been built. There is a lot more availability of capital today than there was 5 6 years ago in Indonesia and in Southeast Asia. And the good part of that is you have capital available to scale companies. The disappointing part of it, or the negative of it, is that there is too much capital and which is being prematurely thrown at these companies, which can even kill markets before. It's like killing the golden goose, and you kill markets before they even happen by throwing too much capital after some sectors or subsectors or spaces which don't even have enough of a TAM to justify venture investing. But generally, the promise of India, especially with the kind of scaling up we have seen on the digital infrastructure side, whether it's on payment or digital ID or affiliated services, continues to be quite exciting. I think the innovation we are seeing in Brazil is actually quite refreshing, and that's kind of what is catalyzing that markets on the fintech entrepreneurship side. And the third market I would say is Indonesia and adjacent markets in the Southeast Asian region, where we are starting to see number of things kind of come together now for promising entrepreneurs.
And in India, I believe your current portfolio, except IndiaMart, includes ZestMoney, Credit Mantri, Fisdom, Shubh Loans.
No, we are not an investor in Shubh Loans. Our current portfolio is IndiaMart, ZestMoney, Credit Mantri, Fisdom, SME Corner, and Neogrowth.
And across these companies, uh, I believe the fastest growing has been ZestMoney.
Well, actually, number of them have been really fast growing. If you look at Fisdom, or if you look at SME Corner, has been the fastest growing SME lending company in its generation. Neogrowth was the fastest one in the generation before. Zest, of course, is probably now arguably the leading, online consumer financing company. And Fisdom's the largest digital distributor on the investment, savings and mutual fund side in the country. So fortunately, they're all on strong footing today, notwithstanding COVID.
And so how do you continue, to be so focused in your India investments when every sector is seeing a huge fintech uptake, whether from retail to small SME banking? Like there are a lot of options to invest. How do you continue to be so focused in your investments in India?
Yeah, that's a tough question, Siddharth, because nobody knows what's the right answer. We will all figure out what's the right answer in hindsight. I think what's important for us is to maintain the consistency of what Kona stands for in the market, in terms of type of entrepreneurs we back, type of opportunities we back, why do we believe they can be successful, how do we figure out they have the right fundamentals, and are we able to consistently show that across our different investments to ourselves and to our ecosystem. And the reason we have some of the investors we have, whether it's the large sovereign development funds as LPs or some of the larger Fortune 100 and 500 companies as LPs, is because of that consistency we believe. So it's a tough question because we obviously debate on what are the things we are missing out on. Thankfully, we have a global fund, and hence, we maintain a balance between what we believe makes sense and at what point we walk away if the irrationality of, let's say, valuation or the exuberance of competition is just getting too much in certain opportunities. And I'll give you an example, which is sort of a controversial one, but I've used it multiple times in public forums, so I'm happy to do it again. We have three neo-banking investments. We are close to making a fourth one. A couple of them in Brazil and in other markets, right? But we have none in India. 18 months back, there was not a single company called Neobank in India. And today we have at least 25 to 30.
Yes.
So there was a point in time, couple of years ago, where lending was everyone's last refuge. Like, sorry, actually, let me roll back. Payment was everyone's last refuge. Everyone was pivoting to become a payment company. But for a lot of guys, that didn't work. And we had a small flash in the pan of PFM as well. When that didn't work, then people pivoted to lending. And now basically now neo banking is the last refuge, or last resort, right, of anyone who is pivoting from a model that's not working. And this is the kind of challenge in our country that worries me, because Brazil has like five big banks. The second largest neobank in Brazil is in our portfolio called Neon. And in the middle of COVID, they just closed a 165, $170 million round in the middle of
Yeah.
COVID CC, and we were pre-A investors, and this is led by General Atlantic, etc. But India, the banks are not terribly inefficient in India. And there are 30, 40 times more banks in India, maybe at least 10x of the number of banks in Brazil, which are high quality. So in the middle of that, I think, without being able to articulate how you are different as a neobank, it is just very hard for us to at least figure out what is it that's different about a lot of these new players who are coming in, and how they are different from Kodak 811 and number of other initiatives going on. And they're better. They probably have some better features, and we can talk about some of them specifically. But is it meaningful enough to really be able to build a differentiated digital bank? That's a very hard question to answer right now, because I'm not able to see it, and we have at least talked to 15 of this, right? So part of the challenge in our country is sometimes we get ahead of the opportunity and way ahead of the maturity of evolution of the opportunity, and throw in too much capital at the detriment of all the investors and all the companies doing it. So whenever we see that happening, I think we typically take a step back, and frankly that's helped us avoid maybe 60% of the highly hyped areas. Now, having said that, it's probably likely we'll miss out on some high quality opportunities, right? But that's the nature of what we do, and we are comfortable, living with that.
So as you mentioned, you have you are investing across 12 countries. So you must be having a large team managing each country.
So we have, yeah, this might really surprise you, but we basically have a total team of maybe, well, we have a few interns, given it's summer, but otherwise we have a full team of about 23, of which About 60% are investing team members. So this is about 14 team members, 13 now 14 team members spread across 7 countries. So we are fairly thinly spread in that sense.
And how do you keep the pulse of each of these 12 countries where you are invested in? Where
See,
because
the
each
good
market
news is,
is reacted
yeah,
differently.
correct, correct. So the good news is we have folks in 7 countries of this, right? And some of these countries are sort of the center of gravity in the regions. Like we have a team in Mexico, we are constantly in Brazil. We have team in South Africa. We have team in Nigeria. We have a team member in team in Singapore. Bulk of our Asia team is in Bangalore. We spend a lot of time in Jakarta. I mean, COVID notwithstanding, we usually are there sometimes even twice a month for extended period of time. So across number of the key markets, we have boots on the ground. And if you see the way emerging markets and these regions work, I mean, these key markets become the center of gravity, and the newer markets actually learn from them, right? Or the new evolving markets learn from them, and seek out high quality entrepreneurs or investors in the relatively established markets in these regions. So that's kind of how we are probably able to develop our ecosystem as well. But at some point, some of these markets will really mature. Like we did not have somebody in Mexico till our last fund, but now we do. We did not have somebody on the ground in Nigeria in the last fund, but now we do. So I think these things will evolve, but it's a balance of local understanding of core markets and and core fintech understanding, and how we blend that as we enter into newer markets.
Ganesh, one last question. In your second fund, you have raised $203 million. Am I right?
That's right. Yes.
Uh, how's the deployment plan across various geographies of this fund, and what's the way going further from 2020 for Kona?
Sure. That is again a very tough question given what we are in the middle of, what we all are in the middle of right now. Having said that, we raised this fund over a period of time. About roughly about one third of the fund is deployed, but we are in a great place as Kona because as 2020 evolves and the world is going to be a different place, post COVID in multiple ways. I think we will be in the market. We will be in the market in a pretty significant way because we have a new fund and we have a lot of capital to deploy in across several focused opportunities. I think the way we evolve is also getting reshaped to a certain extent by COVID. We are starting to see a lot more digitization of several solutions across markets, whether it's payments, whether it's banking APIs and banking tech infrastructure. We are starting to see a lot more interesting adjacent solutions, whether it's in ag tech and finance, ed tech and finance, the broader digital commerce or social commerce and finance, efficiencies across supply chain and financial services, so on and so forth. We believe number of these things we will see more rapid digitization and faster adoption than what we have seen in the past, because through this period of COVID, people are starting to get more comfortable with digitization across various use cases in their lives. So generally, I think that's good news for us. We have obviously been backers of several themes that are likely to evolve more rapidly as a result of customer adoption and education as we come out of COVID. And if anything, it's only going to provide us more exciting opportunities that we can believe in to back.
Thank you so much, Ganesh, for sharing your valuable experience and wisdom on 100x Entrepreneur Podcast.
Thank you. Thanks for having me, Siddharth. My pleasure.